What's up traders, Tom here with another video. The stock market has started to move ahead of unemployment claims, concerns of further shutdowns, and the US GDP results. With the IMF recently stating they expect deeper global recession, where to next for the S&P 500 and NASDAQ? Stay tuned. Today we'll be talking about the latest stock market news, a look at the S&P 500 and NASDAQ from a technical analysis standpoint, and also how putting a plan in place to take advantage of these opportunities is so important. Today we'll be talking about one stock and we'll be having a look at the technical analysis and fundamental analysis for that stock and just showing a decent concept of what you can go through before you come to a conclusion of what you'd like to buy. Remember, you don't have to necessarily do it when the time comes. You should plan it before the time comes. So our story today really begins with the IMF projecting deeper global recession on the current crisis. The fund is projecting 4.9% contraction in 2020 versus 3% previously thought. And this is pretty scary when you think about how big these numbers really are. They're also saying for 2021, they are seeing lower growth than previously expected, down from 5.8% to 5.4%. And this is even with all of these massive stimulus checks and physical stimulus around the world. The global economy is shrinking dramatically, and the projection for the United States is pretty bad. And that's the one we need to look at. -8% for 2020. Even worse than most people are projecting. So if this comes to fruition, expect the stock market to get very jittery. And that's why it's moving down to a key support level ahead of news. You'll notice this, by the way, on any instrument that you trade. Ahead of key news for that instrument, it will generally gravitate to a resistance or a support. Just like a stock ahead of earnings will usually be at a support or resistance depending on the current sentiment. So in terms of news for tonight, we have final GDP expected to be 5%. We have unemployment claims expected to be 1.3 million. And of course, it'll be interesting to see whether the Federal Reserve or somebody else comes out if these figures are worse than expected with some form of positive news like they've been doing over the last couple of months. They've been really backstopping these events to try to stop the market from getting scared. So will they do it again, or will the figures be better than expected? So I want to talk today about a trade idea from the perspective of recognizing a potential opportunity in the market and a potential sector that you may not have been considering before. So retail traders, we all know, are piling into European stocks, US stocks, everywhere in the world, and many big money companies are holding back. In fact, they're looking for dips so that they can buy stocks at cheaper prices. This comes as no surprise to most viewers of this channel, but it sets up the idea of potentially looking at companies that deal with trade volume. So CME is one of those, and this is a company that specializes in global markets, and it's the world's largest financial derivatives exchange and trades in asset classes that include agricultural products, currencies, energy, etc., etc. When we look at what it's done over the last 5 years, it's been a pretty strong stock with nice returns, and we saw highs of $225 and lows of $131 during the peak of the crisis. So is it time to buy a stock like this? Well, it's definitely something that you want to be considering whether the thesis or the story makes sense. So first quarter earnings for this particular stock were very good. They were up 29% to $1.52 billion. And it looked like volumes were up across the board with 45% increase from 2019 during that quarter. And of course, the logic behind this was so many people were hedging risks and using the derivatives to their advantage. If you see an increase technically in volatility in the market, then technically that means a stock like this is going to be benefiting. So what's been happening over the last couple of years? We want to see what is happening with this stock. Well, the stock has been doing very well, but more importantly, it has traded at an average of around 25 in terms of PE ratio, and it had some pretty good earnings per share. Now, one of the things I wanted to quickly point out is that they have been a big beneficial of the tax cuts. So of course, if Biden was to win the election this year and was to reduce the tax cuts, it could affect this kind of company pretty seriously. And this is why you want to look at both sides and be aware of the risks. So effective tax rate before the cut was around 36, and after the cut was around 23. So we need to be aware that that's being factored in somewhat to the stock price. What about the earnings? What about the trajectory? So one of the things you want to see in a stock before you're buying it, especially if it's a growth stock and it's got that higher PE valuation, is you want to see a nice steady kind of curve in terms of earnings. And this certainly does have that. Each year, total revenue has increased, and we expect it to, of course, increase again this year because of trader volume. With so many people coming in, with so much risk adjustment, with equities and options becoming so popular again, we are going to see an increase in revenue. But is the stock market putting that into the price? Well, let's take a look at what the boffins say. So the bean counters at all of the top economists are basically saying that this stock is currently undervalued. They have a buy on it, and they are expecting $195 by the end of the year. And this is updated as of the 24th of June. It is trading under the 5-year average from a PE perspective. We're trading at 24.7, and that is certainly important. If we take a look at the price to sales, forward PE, trailing PE, all of these figures, it certainly looks like it's becoming better value. But I want to point out these points here where we were trading above the general average. And when we were trading above the general average, what were the insiders doing? We do want to know what the insider traders and the people that know this company better than us were doing with their money. Well, it looks like they were net actually selling. So they were actually negative during these periods of time. This goes back to 2017 when we started seeing that high valuation of the stock, and they were actually selling their portions. But recently they have begun purchasing portions again. And this is a very important statistic and something that we want to be looking at and want to be paying attention to when we're considering the stock. If we see all of these things coming together, it strengthens our idea of the stock doing well. What's been happening recently? Well, May was a great month in terms of equities and options, but a weak month in other areas like agricultural, derivatives, etc. So this is what always happens during these times. You'll notice that people focus in on an area or an industry. If you look at their report, it's very, very strong from the equity side. Well, luckily it's cheaper. It is closed below a very key zone as well. So this would be considered a technical channel, and we have a resistance, and we also have a change of trend now. So if we have a look at what happened, we had a peak, we had a trough, we had a lower peak, and we have seen it break through to a new low where we've made a lower trough. And generally when a channel breaks, it goes the distance of that channel, which in this case would be from 170 to 150. And we closed last night at about 167. So pretty key that this is what happened, but it shows that if the stock market, or in particular this stock, continues to fall off and gets back to 150, it could present a buying opportunity. Is this company going to be earning money? Yes. Does this company have bad debt? No. When we look at the figures, overall, this company has very strong balance sheet with a strong history of earnings, and that is important. In fact, in our course, we talk about how we're going to break down things like debt to equity ratios to gain an understanding of how much debt that company should have and how much it should be using it to fund its growth. So one of the best ways is to compete or have a look at the other companies in the sector. If it has a crazy level of debt compared to all of the other companies in the sector, e.g. like a Hertz, then it could get very, very bad for you. So always think about debt to equity because it's still one of the most important factors, and you do need to bring that into your analysis. So let's now talk about the US 500 and where we think it's going from here. So one of the things that has hit the 4-hour 200 moving average, simple moving average, it's finding some level of support here, but more importantly, it's coming down to that 3,000 psychological level. Now, Powell and Trump have definitely tried to protect this level. So tonight, if the GDP figure is worse, the market could go through and slide through this zone. If it gets below this zone, I've even seen a lot of industry big fund managers mentioning the 2950, 2965. And many people see it as a key level where if it breaks this level, we very quickly can move down to the 2800 zone. If that happens, this would be a potentially good zone for people to look at and start doing their assessment. But it's important that you do your analysis on the stocks before it happens. So here we have the break of this little kind of channel. We see that it's coming down. It's coming down strongly to the 3,000 ahead of the news. And depending on what the news is tonight, it will either bounce off or it will come down lower. And if it gets below this zone, expect quick flash selling to fill that gap or fill that area. What about the NASDAQ? Well, the NASDAQ is going to have some form of course, role reversal off the previous highs, becoming support, and that 20 EMA remains a dynamic level of support. We need to see the market break below that and then break below 95.20 before we see further weakness. And further weakness would push the market down, potentially down to around this 8,800, 8,900 area, and there will be strong buying support there. By the time that gets down there, you've got to think about what would happen. So we might have the 200 moving average also coming up here. We're going to have that 9,000 psychological zone, and previous resistance will act as support. So there'll be a lot of strong buying pressure here. And if it did come down here, that would be a key area. If we also draw something like a Fibonacci retracement, we can see whether that makes sense to the chart. So if we do a fib of the whole move, notice how the 38.2 fib hits right on that level. A key buying zone where a lot of Wall Street will reload their opportunity for the long side. Remember, we still have a lot of fiscal stimulus and a lot of things that will help these large companies moving forward. I'd like to just leave everybody with this idea today. If you break down sectors that you potentially see value or you want to buy, you can do that by looking at the different sectors, looking at how they've performed over time, and then breaking down those companies. We will be doing that on this channel very soon. I have a video planned where we'll go through different sectors and then we'll break down things based on certain parameters that we're looking for. We always want to buy quality over, I guess you would say penny stocks, because we want to have our money and we want to make sure we believe in what we hold. But it's important to understand those sectors. Understanding which ones have done well, why they've done well, why they've done poorly, which ones will actually benefit from, let's say, a vaccine as well. All very important facts when it comes to looking at the analysis. If you've enjoyed this video today, make sure to subscribe, hit that bell, and of course, smash the thumbs up as well. We'll see you in the next video, and happy trading.